been a subdued start across the Asia Pacific.
Q4 largely in line with the poll. In fact, a slight beat, you could call it.
RBI has plainly cautioned that no NBFC should disperse loans in excess of 20,000 in cash.
The 61.8 is 22,165. So we almost got to it, and then there was a bit of a bounce. The sensex is down about 142 points.
We don't see it as a challenge.
RJ remains above 14%, and it's up almost 100 bips year on year.
And we have only the auto index, which is in the green today, so a sea of red.
2,000 crores that we had seen in the month of March, so a significant decline seen there.
Today, the airline will be operating 283 flights instead of the usual 360 daily flight.
Have the mid caps, which are falling in line with the benchmark.
Well, no respite at all. That is the day so far. This is the last hour in front of us. Closing bell. We're coming to you from the CNBC-TV18 Motilal studios. Thursday afternoon. I'm Prashant. With me, my colleagues Rima and Surabhi here in the studio, and Nigel is joining us from the newsroom. Guys, hi, good afternoon.
Hi, afternoon. I think the only respite is that the 22,000 mark on the Nifty has not cracked.
Let's not talk too soon. There's
At least
long 60 minutes ahead. But yeah, it's been, I guess, a real disappointing day all over again. And the way the mid-cap market has sold off today, that's something that you really can't ignore, guys.
No, I think that is absolutely true. And, again, it's not global. It's none of that. It is once again. And I think today, maybe at the margin, perhaps a little unexpected as well, because as of yesterday's close, the market finally got to it basically retraced an important level, got to almost to that level, and then there was a bit of a bounce, and that kind of gave hopes that, at least for now, before another round began, there will be a chance of a bounce or something, but nothing. Straight down, continued to sell off, and we are now at 22,000. Basically, we're at 22,000 in that sense. If you're looking largely for where we kind of go from here, if you're looking for supports, etc., the April low, I think, is a logical target from where this entire rally began, right? So the rally was 21,777 on the Nifty. It began there, and then it went up all the way in May to 22,794, from where we've sold off back to about 22,000 or so. So that's the next kind of logical level. And the Nifty Bank is the other one where I think the support comes in. That's not yet broken, a similar retracement, which now stands for the Nifty Bank at I think we're at 47.5. Yeah, 47.526 is that support. We're about 200 points away from that particular level. Is it politics? Is it some worry at the margin? I mean, that most definitely is. I think there's no two ways about it. I mean, you only have to speak with market participants and try to get a sense of what's going on. And of course, you got to see that in the context of the fact that there is a fair bit of markets that have done so well, and there is some position lightening which is happening. It's not like a directional call of the view of a market which people are taking, just lightening positions because you don't know till you know, and that of course we'll only know in the first week of June in that sense. So it's a pretty large cut once again. Broader markets are actually having it worse. Mid-cap index, small-cap index, they're down between 1.75% to 2% each. Those are the kind of cuts that we have on those two indices. Rima.
And the advanced decline ratio is one stock gaining for four in the red. Putting it in numbers, it's 450 stocks advancing for about 1850 stocks declining today. And the gap between the two has only narrowed as the day has progressed. We've got a few earnings reactions which are quite stark. So on one hand, you've got Asian Paints that's down close to about 3.5% as the management talks about price cuts, down trading, and Asian Paints hasn't managed to recover post the miss on the top line, and margins still down close to about 3.7%. Where there is buying is the auto space. So the Nifty Auto Index is holding up. Hero MotoCorp continues to remain strong. Tata Motors gains ahead of its numbers tomorrow. And State Bank of India's strong showing is at least providing some support. So SBI is up, 2.5%. We'll get the management. The press conference will be beginning very shortly. But because of SBI, the Nifty PSU Banking Index is holding up in the green, and that's up close to about 0.25%.
Absolutely. All eyes on SBI. By the way, check the other PSU banks that have also just reported. IOB and PNB numbers are also out. IOB seems to be more or less sort of in sync with what the expectations were. For PNB, the NII is in line. I mean, the net profitability, you could argue, is slightly below. But anyway, I mean, there is no issue with the asset quality with any of the banks, and that's not a issue this season, largely speaking. So flattish trends in terms of reactions on those stocks. I just want to pull out some of the others since we're talking about this broad market decline. One, of course, is the entire gold financier space. Despite what Muthoot Finance told us, so the market's not exactly believing all of it immediately, because Manappuram and Muthoot, both of these stocks are still down quite a bit. down between 3% to about 6%, depending on which one you're picking up. So that's one area which is under pressure. And then lots of result reactions which are playing out on the downside. Look at the sharp sell-off on Sula, for instance. A stock that was doing extremely well up until January, and now everything's changed. Sula's down about 8.5% last I checked. 8.5% lower. The reaction on Piramal Enterprises is also pretty severe, down about 6% there. And Navin Fluoro, lots of follow-through selling happening. Numbers, of course, came earlier this week. And optically, you could have seen that there's some sequential recovery, but clearly the language was not something that the market liked. And Navin Fluoro is seeing lots of pressure. Motilal Oswal, another example there, how mid-caps are really selling off. But Nigel, I think SBI is giving us some hope today. That's been the only positive so far, I think, in the large cap space.
Well, that's right. Since you mentioned about Sula, I just want to give you this data point that I learned from the management on the show. They said that as a consumption theme, India is very, very under-penetrated on wine. As a percentage of the total mix, wine accounts only for 1%. So there's big scope to grow of around 3 to around 5%. The problem is that that scope is great, but the growth hasn't been good for the company, and that's why the street doesn't like it. A growth miss as well as the margin miss, so they're guiding for better times going ahead. So we'll have to see how that goes. Just thought I'll give you that input, Surbhi. Well, let's get in Mitesh then. Mitesh, tell us, how do you trade the index? We're at the low point of the day.
Yeah. So, Nigel, I think, we've kind of broken the 22,200 support area, and therefore, I think, this decline has continued.
Mitesh, apologies. If I can just interrupt you for a second there. The SBI chairman is speaking. We'll just come back to you.
First, with a brief description of the present global and the domestic economic scenario. Global growth remains resilient with easing inflationary pressures and tight employment conditions in spite of geopolitical and extreme weather event risk. The IMF, in its latest April 24 World Economic Outlook, raised the global growth forecast to 3.2% for the year 2024, which is 10 basis points higher than its January 24 update, and expect the global economy to grow at the same pace in 2025. Global headline inflation is expected to fall from an annual average of 6.8% in 23 to 5.9% in 24, and further to 4.5% in 25, with advanced economies returning to their inflation target sooner than the emerging markets and the developing economies. Commodities and energy prices can drag the economic and the growth prospect by infusing sudden shocks on the supply side, a collateral impact of escalating geopolitical tensions at multiple fronts. However, in this backdrop, as far as India is concerned, the conditions are, however, shaping up for an upshift in the real GDP growth, backed by the strong investment demand and upbeat business and consumer sentiments. CPI inflation has already gravitated to 4.9% in March, after averaging 5.1% in the preceding 2 months. CPI inflation is expected to moderate in ensuing months and is expected to taper to 4.5% in financial year 25 compared to 5.4% average in financial year 24. In financial year 24, the credit offtake of the all scheduled commercial bank recorded a growth of about 20%, while deposit grew at about 13%, and the momentum with some moderation is expected to continue in the financial year 25 too. I'll now discuss the broad bank's performance parameters. Once again, we have delivered excellent numbers. I'm happy to share that our net profit for financial year 24 is the highest ever at rupees 61,077 crore, showing an increase of 21.59% over financial year 23. Our net profit for the quarter 4 of the financial year 24 is at 20,698 crores, which has increased by 125.87% sequentially. This is despite incurring wage revision expenses of rupees 13,387 crores during the current year period as per the bipartite wage settlement, and after absorbing the additional liability to the tune of rupees 7,100 crore relating to pension liability and the DA relief neutralization in the third quarter as a one-time exceptional item. Our ability to absorb the above liabilities without significantly impacting the long-term profitability outcomes of the bank demonstrate the resilience of our balance sheet. ROA of the bank stands at 1.04% for financial year 24, and it has improved by 8 basis points over financial year 23. The ROE for the financial year 24 is at 20.32%, which has improved by 89 basis points over financial year 23. We have been consistently delivering ROE in excess of 15% for the last 7 quarters. The cost-to-income ratio of the bank is at 55.66%, including wage revision expenses and excluding the impact of the one-time exceptional item of pension liabilities and dearness relief neutralization in Q3 financial year 24. Excluding the wage revision and one-time exceptional item, the cost-to-income ratio would be at 49.34%, which is an improvement of 315 basis points over financial year 23. Non-interest income has shown a growth of 41.15% in financial year 24 over financial year 23. Our deposit has grown by 11% YOY and term deposit has grown by 16% YOY. We are mindful of our liability portfolio as it provides a stable stream of resources for us. We continuously monitor the concentration of our deposit profile daily, ensuring that dependency on the wholesale funding is contained within the prescribed levels. Liquidity coverage ratio stands at 124% as on 31st of March 24 and is well above the regulatory benchmark. I am happy to highlight that the credit growth has been robust across all the segments. Our retail, agri and MSME, which is popularly known as RAM, advances have crossed 20 trillion mark during the year.
Okay, all right. That's the management of SBI then sounding rather optimistic. But the problem is with the markets. 22,000, we were just holding on to that. As we speak, that's gone. Mitesh is with us. Mitesh, we're talking about the 22,000 odd mark that's just got broken. Where do we head next? What are the support that you're seeing on the index? And what would the trade be? Will you be looking to short on a bounce?
See, I think the idea is that 22,200 was a key level for me. Now that that's gone, this decline should extend to about 21,950 as a minimum, and we are not very far away from there, to say just 50 points away from there. But in the worst case scenario, if you pencil in, I think there's a good chance of us retesting this levels of 21,800, and even then, I think, now that this movement is damaging the weekly charts, 21,650. So 21,800, 650 broadly are the two targets once 21,950 is conquered as well. So the idea is, yes, to sell on bounces. I think pullbacks to about 22,200 would be good ideas to take short positions on the Nifty index.
Okay, all right, Mitesh, thanks very much for that. Stay with us, though. I mean, we'll need your advice and guidance through over the next 60 minutes or so. We'll come back to you. It's a bigger cut now, much larger cut now. 22,000 under pressure. I mean, we were at 2250 when we started, and I was saying that almost 22,000. We are actually at 22,000 now, we're I think now below it. So these are pretty large cuts that are coming through. Just want to recap the SBI numbers because the number came, the stock was up, and then it sold off, and then there was another pullback sharply higher. The Q&A with the management perhaps will follow in just a bit, but let's get the numbers with Abhishek. Abhishek.
State Bank of India's strong loan growth has aided with respect to them beating our polled NII and PAT. So if you take a look, deposits are up 11% YOY and 3.5% quarter-on-quarter, largely in line with the estimate from analysts. However, advances growth was at 15.2% YOY and 5% sequentially, despite the fact that they grew in the previous quarter 5% on a quarter-on-quarter basis. Despite the strong base, the growth is pretty strong. So YOY, it's the highest in last 4 quarters, and sequentially it's the highest in last 8 quarters. This is led by the corporate book, which grew by 16% YOY and 11% sequentially. The annualized slippage ratio is one of the lowest that you are seeing in last 4 quarters. It has come in at 0.43% versus 0.57%. So slippages were expected to remain stable on a sequential basis, but they have declined, leading to asset quality being the best in last 9 years or even more. Gross NPA ratio has declined to 2.24% versus 2.4% in the previous quarter. Now, analysts were pegging a net interest margin to remain flat on a sequential basis, but net interest margin has expanded to 3.28% versus 3.22%. So, best return ratios that you are seeing for SBI in last 9 to 10 years. Quarterly ROA has touched 1.35% plus, so it's at 1.36%, and ROE is at 20.3% for FY24. Watch list has declined massively by 20% quarter on quarter and is at just 0.09% of the book, which is the lowest that you are seeing in last 29 quarters. Cost to income ratio is the lowest in last 5 quarters. It's improved to 51.3% when compared to 60.3% in the previous quarter. So with respect to their PNL, both the NI and PAT is a beat on our poll. Back to you.
Okay, all right, Abhishek, got that. Thanks very much. Let's take the discussion forward with Prakash Diwan, who's joining us on the show today. Prakash, good to have you on, as always. Let's start with SBI. Nothing wrong with the numbers, as Abhishek was telling us, and on several parameters, they've actually done better than market estimates. But the mood is a little somber overall. I mean, even SBI is slipping from the highs. How do you look at the overall market context? And you know, within that, how would you rank SBI's Q4 performance?
Good afternoon, Sarvi. So I think there's nothing wrong with the numbers, of course. In fact, the numbers are far better than what most of us penciled in. And the explanation seems to be that they've probably got advances in all the segments growing far more, in contrast to what other banks have actually delivered. And remember, YOY, the numbers will look even more stark because last year, the March quarter was possibly where the rural and the agri side was a bit weak. But what it tells you is that everything is fine with the banking segment. The cost of deposit issue is not so significant. They've been able to generate NIMs which are fairly, impressive. So it's just a bad day. Had it been on a good day, these numbers would have probably got you about a 4-5% pop on the stock. So people will digest that. It's just a sentiment of the market and whatever selling that you see, whether it's algo-led or, it's precipitated by some sort of, the downward spiral that you see on the indices is what's kind of causing this damage. But otherwise, I think the numbers are very impressive from a longer-term perspective. It just reinforces the fact that in spite of a 40% move in the last 6 months, SBI still has more legs to go. And which means that other PSU banks will also kind of follow this. That always happens anecdotally after a quarter. You'll have the BOBs and the CAN banks also come up with something similar. And that's what the opportunity promises right now.
Okay, that's about SBI. Hi, Prakash. Good afternoon. But what about Asian Paints? That one's taking it on the chin. The numbers were a little bit weakish. And the problem was the commentary was weak as well. They said that the revenue is impacted by demand conditions, down trading. They also saw price cuts across categories which suppressed their revenue growth. Now the stock is down 5%, mind you. Your view?
So good afternoon, Nigel. So I think Asian Paints, the commentary was very much on lines of what is anticipated. No management will come out and be very aggressive with, building expectations, especially in an environment where the competitive intensity is going up. But as I said earlier on the call, we were anticipating these price cuts to impact margins. But what's promising or what's been favorable is the volume growth. I mean, a volume growth of 10% is not bad at all. What it means is that the moment, this whole competitive intensity stabilizes or normalizes, and that will happen as people start getting to use the competitors' products and utilize the distribution network. And remember, it's never too easy for anybody to start getting acceptance from day one. So that's the time where Asian Paints will make a significant comeback in terms of margins and pricing. And volume growth, if it continues to be in double digits, I think the recovery could probably be far sooner than what we anticipate. So if you ask me, my view is a bit contrarian, but at stock multiples of 42 odd, Asian Paints at 2,700 actually makes for a very good entry point. So, you've digested all of it, including the numbers, not just sentiment, but including the numbers tell you where things stand. And I don't think you could see any deterioration beyond this. So this seems like a bottoming out quarter, and things could look up from here on.
Prakash, to stay on, need to slip into a break. By the way, that 22,000 mark is gone. It's now approaching more than a 300-point fall in the Nifty, while the sensex is now approaching a 1,000-point cut. Get into a break. Rajesh Kothari, Managing Director at Alf Accurate Advisors, also joins in on the other side.
Welcome back. You got what, 290 points low cut coming through. We broke below 22,000 and now trying to claw back above it. Slightly above 22,000 levels is where we are at. You know, if there is the worry at the margin is politics and elections and how it is going, because we have 3 phases done, which is a total of 283 seats are in the ballot box, right? I mean, in the EVM, so to speak. Which is about 52% of the total votes which have got to be put in. So there is 50% of the election which is still left, and it's a long one, running over a month and a half. And as I was saying earlier, I mean, the time essentially, the long period of time, it's just sort of, it's of course closed, tracked very closely, but maybe at the margin it's also just gives you a lot of time to think in terms of what's going on. And as I was saying earlier, we don't know till we will know, and that is only on the 4th of June. All these theories about turnout and what it may mean, etc. There is no conclusive sort of takeaway that, well, this means this and this means it's advantage the incumbent or opposition. I mean, a lot of theories, but that's what elections are about, and of course election analysis is about till you actually have the results in your hand. But I'd say this, the markets are lightening up, and that may not necessarily be a bad thing going into the election result, because that gives you you kind of go in with low expectations, and if you're positively surprised, I mean, that'll be very good news. So may not necessarily be a bad thing. It of course looks very bad right now with a 300-point cut, but that's the overall picture. Rajesh Kothari is with us, Managing Director at Alpha Accurate Advisors. Rajesh, good to have you with us here. Good afternoon. Thanks very much for your time. Even have to just sort of get your first thoughts on what you're seeing out there on the screen with the pressure that we've been seeing for now almost this is the 4th day, started last Friday.
Yeah, I think, one thing is very clear that last 1.5 to 2 years have been spectacular returns for all the investors. And as that was happening, one thing is very clear that this year one should not assume very high returns, After such a great return, you might see consolidation, some moderation in returns, but the long-term story is intact. So I think we are in a structural bull market. But if you ask my personal view, in this year, we will see many winners and many losers. So it is going to be a year of stock selection. It is a year of bottom-up opportunities rather than top-down views. A lot of things are happening globally, and therefore it is very, very important to be bullish, but at the same time be prudent. So I think prudence will pay good rewards in the current year compared to last 2 years where throw the dart and make the money. I don't think that this is going to work out from now on. So good market is respecting now quality, which is a good thing to happen. Market will respect skills, which is a good thing to happen. And only the companies which are fundamentally sound, that stock price will be rewarded. Otherwise, there are many companies which have went up significantly without much underlying strong quality and fundamentals. But I think this year probably will not see great returns for that kind of a portfolios,
Rajesh, afternoon. Where does L&T stand in the stock selection approach, bottom up? If India has to do well, if the next decade belongs to India, then perhaps the largest player in infrastructure capital goods can't be left behind. Now, we've got a sharp reaction to the earnings, the margin miss, the margin guidance. Is it a buying opportunity?
Well, currently we do not own this name. And, if you remember last time we had a very detailed discussion on the capital goods sector. There are 2 types of buckets within capital goods. One is the traditional growth drivers, EPC, road, port, that kind of a capex beneficiary. And other is the new growth drivers, data centers, smart grid, automation, and so on and so forth, the process industries. And our entire portfolio is more focused towards the new growth drivers, who are basically the companies which can benefit from 20, 30, 40% compounded growth, which is happening on that side of capex. So we are holding product companies rather than the companies which are primarily into EPC. And I think as on now basis, that's our view on the capital goods space.
Rajesh, hi, good afternoon. I don't know if you can. Would you share some examples? Because the thing is that these themes are also being sort of tracked and chased very widely in the market. So in some cases, stocks have run up a lot. So can you give some examples where perhaps valuations still justify fresh purchases, where the runway for growth is long ahead?
Unfortunately, I won't able to comment on stock specific, but let me put in this way. For example, the pump industry. Now, pumps have the wider application, be it a nuclear power plant or be it the industrial capex. Pumps are going to be definitely is a critical component for any capex, correct? Now, in the pump industry, there are only 2, 3, 4 players. And one of the company which we own is the only company in India which has got approval from Nuclear Power Corporation from, I think, last 60 years. There is only one company which can do that. There is a multinational company, debt-free balance sheet, and they are going to be significantly beneficiary of the underlying capex which is happening in the industry side. Similarly, there are companies, like last time we discussed few names, which are our top holdings of a portfolio. These are the companies which are benefiting from the automation of the grid, the HVDC project, because the size of opportunity for this kind of a companies is going to be 2, 3, 4 times compared to what India has witnessed in last 3 to 5 years. So the valuation will always look expensive, but in capital goods, you need to focus on the order book, the order intake, and how your portfolio is positioned, how the company is positioned to capitalize on these new growth drivers. Once this order book translates into revenue, that's where it gives you EPS. But stock price will always focus on incremental order intake rather than the revenue and margins.
Hi Rajesh, good afternoon. One name that we've discussed in the past, I think, is Titan. I think for your clients, you all did hold that some time ago at much lower levels, I think so. But this past quarter's numbers are a little bit disappointing, I think so. How are you all approaching this theme? The management's commentary on the margins itself is a little bit skittish.
Well, I think very important, Nigel, is to look at the margin performance with the backdrop of what are the gold prices. At this kind of a high gold prices, still companies able to maintain that margin. That is commendable job. Now, if you look at the gold prices, the high gold prices will never continue for everyday basis, correct? The gold price itself is also a very volatile. So what is most important to figure it out is that how the company does during the bad time of its cycle. In good time, every company will do well. But in bad times, if you can hold the margins, then it means that as and when the gold price correct, of course, then again margin trajectory will come back. But I think that's very small point. More important point is look at their growth and look at the last 3 years compounded, because in this kind of companies, you need to look at 2, 3 years compounded growth rather than looking at quarter on quarter, because this people are talking about is skeptical about this company for many years. Every quarter something happens and they say story is gone. But this company has kept delivering, and I think opportunity canvas is pretty large. Company has a competitive advantage, and in such kind of businesses, whenever you see quarterly based some volatility, I think those are the fantastic times to add it to your portfolio, because after 2 years, you will remember that, oh, this was the quarter where I got this opportunity. This opportunity don't come often in companies like what you have mentioned, So please put a disclaimer, because we continue to own this name for our clients in PMS.
Okay. Auto ancillary was a space that you were looking at in our last conversation. Have you made any fresh purchases? Yesterday, Bharat Forge sounded very positive and optimistic about the FY25 prospect. So which stocks do you like over there?
Well, we like auto and auto ancillaries both. And within auto basket, OEM, we prefer two-wheelers compared to passenger cars and commercial vehicles. We own, the top 2 names within the two-wheeler space. And in auto ancillary space, we own number of companies. These are the companies which will benefit from electrification of the vehicle. Like last time what we discussed, it means more sensors, more cameras, more safety norms, more airbags, and so on and so forth. And there are many companies, most of these companies are debt-free or under-leveraged balance sheet with a oligopoly or monopoly kind of a market share. And they are still trading at below 20 times price to earning multiple, with a potential earnings growth of 20% plus compounded for next 3 years. So it's a very interesting bucket. And I think there are many opportunities within this space. We like this space. We continue to be overweight in the entire auto and auto ancillary space.
Okay. All right, Rajesh, we will leave it on that one for today. Thank you very much for joining in. So stock pickers are always out there looking for ideas, while the market keeps falling under its own weight. And that's been the trend over the last 1 week or so. Scott's Kubota numbers up there. Profits are higher. We'll put out some of the other details as well. We have Rohit Srivastava now joining in. Good time to get some perspective in also looking at technicals, because there are rarely any fundamental reasons that you can cite for the kind of decline that we are in the midst of. Rohit, hi, good afternoon. Great of you to join in. So what do you think is happening out here? I mean, is it just pre-election jitters? Again, more than the reasoning, because we don't have clear answers to it, I think it's important to look at the texture, nature, and the technicalities of the fall. So, fill us in over here.
So one of the ways to look at it is that we have seen a lot of rotation in the market since January. For a long time, it was looking that rotation is toppish. That was sort of our view. But somewhere we've recently started to think that given the time it has taken, it could also be that it ends up being a long winding consolidation where individual sectors or stocks corrected a lot. Others which have not are doing so. Some of them are doing it now. For example, you see it in large caps like Reliance Industries. So there is that shift. For example, you have strength in the weakest areas coming back, which is FMCG, IT. Those are some of the weakest segments of the market seeing strength in the last 4-5 days. And you're seeing some correction or weakness in areas that were very, very strong, whether it's PSUs and oil and gas and so on. So I think this is one part of the texture. And can we really continue to move ahead with that kind of rotation? Because if I look at all the bottoms that we made in the market, say the bottom we made in late January was closer to around 21,100. Then we moved on to make it closer to 21,700 sometime in March, and then a little above that in April, 21,7 something, 767 or so. Now we are getting closer to so if I touch a line of all these bottoms, the bottom line comes in at around 21,930. So that can sort of be the next major support, and we have come very, very close to that. The risk is, okay, what if you break this level? What will happen? Now, if you break this level, especially tomorrow, it's the weekend. If we do break that, then there is room for it to fall to around 21,200. So that's around another maybe 600, 700 point downside if we break below this. But if by tomorrow we are able to recover back, say to 100 or so, then that would be a positive sign that we've held the weekly support levels for the nth time. And possibly can move up again from here. So that's what it's going to be like. We may start seeing some very oversold short-term readings, but it's with the market. It's like a falling knife. Unless it actually starts showing a recovery, we don't know whether the oversold reading is going to get more oversold.
Rohit, the Nifty RSI, etc., is about 40-45, right? Now?
On the daily chart, yes. On the hourly, it's already dipped below 30. So on intraday charts, it's already there. We do use something known as a momentum swing indicator for very short-term highs and lows. Usually, if it gets to single digits, we say it's very oversold. Right now, that is reading only, it is oversold, but not extreme. So it is reading at around 17. Okay. And we have seen readings below 20 also result in markets bouncing back. But like I said, till you actually start seeing that positive momentum. So I look at the swing, I look at the hourly RSI, but I need to actually see some positive momentum to feel that, we're done here.
What about the FI positioning in index futures, etc.? What is anything to glean from that? In cash, of course, FIs have been sellers. I mean, again, that is, I think, useful only at extremes, right? And we're not, it's not here or there.
So it was at an extreme on the 24th of April because there was 1 lakh short contracts by FIs, and then that led to, that all got covered, last few days back. Yesterday's reading is still only a minus 91,000 contracts. And remember, I'm saying this is the adjusted number after that drop from 50 to 25 per lot. Right, so this 90,000 number would have been much less, be around 45,000 based on the older numbers. So it's not a huge short position in that sense, because unless you are more than 2.5 lakh contracts short, we don't say it's a short covering bottom. But on either it's not long, not short. So I think FI data is not really, positioning is not really telling us much right now.
FMCG stocks were showing some signs of life, particularly at the beginning of the week. Then again, yesterday and day before, they've not managed to follow through with buying. If there is a lot of rotation, if there is rotation which is going to take place, where does FMCG stand in names like an HUL, Dabur, GCPL?
So they'll still look like outperformers, right? What we do is, like, for example, this fall started around, we can either say it started from the 30th of April or at the subsequent high on the 3rd of May. And subsequent to that, if we just look at the strength and weakness, we'll still find FMCG at the top of the list in terms of strong sectors. So that means that in this fall, we would still think FMCG is the sector to go to because that is showing the relative outperformance during a decline. That is how we look at it. So it's more of a timing thing. I mean, till yesterday, those stocks were up. Today, they may be down because the market is under such pressure, but they are still outperforming on a relative 5-day, 7-day basis. So that doesn't really change the strength that they're showing. Same with the autos, right? They also, the auto index made a new all-time high today morning. That's still showing relative strength compared to the market.
All right, Rohit, hi, good afternoon. Nigel on this side. What about the Nifty Bank? You know, that's the one that's taking a harder knock in the last few sessions. I missed the levels that you were talking about, if at all, on the Nifty Bank. It broke the 20-day MA. Now it's just broken the 50-day MA. The 100-day MA is another, 400 points away from current levels. So what's your reckoning out there? We were talking about 50,000. Now we need to be content with 47,500.
Yeah, so if I take a trend line of all the bottoms since the February low, around the 12th of Feb that we made to the subsequent ones, we've touched that line again on the 20th of March, then again on the 19th of April. And that line currently comes in at around 47,250. So that's, I think, the last line of support for this sell-off right now, because if that breaks again, then we'll start looking at, a deeper cut, possibly going back to the weekly ranges, which so far have not really broken. In Bank Nifty, in fact, recently it was starting to look like it's starting to hold out or outperform. It breaks that, then we open up room to around 45,160. So we'll have to watch. Does it really break, 47,220 tomorrow, or does it hold that? That's going to be an important level.
Rohit, and some of the global stuff is also kind of it stopped mattering in that sense, right? I mean, of course, not long evidence of it, but after the jobs data last Friday, we got a meaningful cool-off in yields, US yields, etc. So this is very local, whatever is happening, nothing to do with some of the global stuff which is going on. Last 2 days, of course, US has also been very, very quiet.
Yeah, it's very, very much local. You're right about that, because you did see European indices, for example, hit all-time highs in the last couple of days from France to Europe. We're seeing that happen even in places like China. China made a 9-month high today. You're seeing that in the Kospi. You're seeing that in Taiwanese stocks. So essentially, you're seeing a comeback in Europe, emerging markets, all of them showing very strong trends. And so that really tells us that whatever is happening here, as you rightly pointed, is domestic. I tried speaking to a couple of people. Everybody's concerns are around what is happening, with the election results. Is the lower turnout going to mean something? Some people pointed out yesterday's speech by, Narendra Modi, Shri Narendra Modi, really being taken as a concern by some traders that, is it, does it show some kind of worry? So people are trying to really guess this game as we are, coming closer and closer to the result outcome. That, how good is it going to be? But I think more important than if it's going to be good, then eventually things turn out better. It's only if it's a complete loss do you really get worried, which looks less likely the case still. So I guess as long as that is true, this market panic may give us an opportunity to just buy at better levels.
Okay. Rohit, stay with us. Okay, if I could request you to stay with us and sort of track the markets with us till the close, 3:30. We'll take a quick commercial break here. I'm being told we have to do that. We'll come back. We'll get you D-Street chatter with Nimesh. He's been working the phones, trying to understand what's going on. So he'll get us a sense, a real-time sense of that. And of course, the stocks that he's watching out for as well. Buy and sell trades, short-term ideas with Mitesh. And Amrish Baliga will also join us on the other side. So all of that coming up.
Welcome back. Well, the markets are at the low point of the day. Hard to find any winners. In the last few minutes, I think Thyrocare has moved to the high point of the day. Some volume pickup out there. And that stock, in fact, is seeing a bit of a spike up. So I think you can just pull up that name as well. But a good time to get in. Nimesh, is that sort of a day? But as we were discussing, a bit of a knockout punch coming
Absolutely, from the bears, right? And again, today's fall has come as a bit of a surprise, frankly, Nigel. There were no such indications of such a sharp sell-off. The global was quiet. Even here, there were no large accidents, so to speak, in terms of bad earnings. So today's fall has come as a bit of a surprise. Now, a couple of things. One, we've broken one first crucial support of 20 to 100 on the downside. Now the next level to watch will be 21,800. We've been saying this for a while now. So let's see whether that's get defended by the bull. So that will be an important level to watch. I guess today is more about unwinding from retail and retail investors, not so more from the FIs. So if I have to put my stick out, and say I don't think there is a large sell-off from the larger FIs. So need to see how the data pans out. But at least that's not a feedback that I've been picking up, that there is a massive selling from the larger FIs, or for that matter DIs as well. So that number will be quite crucial. I guess I've been saying this for a while now, that election jitters are for there, and that could add to the volatility. But now from these levels, one needs to watch out, because the PCR has now fallen to 0.68, and typically around 0.65, 0.6 levels, the markets tend to bottom out, right? You keep highlighting that data. So today's FI data would be quite crucial, and again PCR has fallen to 0.6. But I guess there is a bit of unwinding and nervousness now from retail investors, at least in the broader market.
Well, Nimesh, this could be a blessing in disguise, actually, because if the verdict is actually in favor, then you'll see a big bounce from there. Otherwise, if you rally ahead of the election announcement, then there's no reason to see a rally. Now you're getting a reason to see a rally. But tell us individual stocks.
Right. So in terms of individual names, the first stock is Nuvoco. That's been a big underperformer, been consolidating in a very narrow range of late as well. But now there are enough indications that there could be a large block deal in Nuvoco very soon. So that's something to track going forward. The second stock is BPCL. We saw the HPCL numbers, but BPCL will also come out with numbers today. Even there is a board meet for bonus as well. But I guess before the results, there is a bit of buying interest as well. So expect high delivery volumes in BPCL in today's trade. The third stock is ITC. Well, the stock is under pressure today, but in the last 30 minutes, I understand there is a small MOC buy flow at a leading FID. So watch out for last 30 minutes move in ITC. And the last one is Paytm. In a weak market, that stock is locked at 5% upper circuit. Volumes are on the higher side, and the indication it may be some bit of HNI interest is back in Paytm after sharp correction. So that's the reason why Paytm is buzzing in trade today.
Okay, Nimesh, thank you very much for that. So interesting list of names as always, and some feedback. This is now looking like this is now the cut, right? It's minus. The figure is closer to 400 than it is to 300, right? 365 points. And that is a fast moving screen on the way down, which you're seeing. Wow, I mean, this is quite something. Take a look at the Nifty, sort of where the pressure is coming from. HDFC Bank is adding 60 odd points, index pressure, L&T, Reliance, ITC, but it's everything. I mean, I was looking at the list of the gainers right now in the broader market. There are 4 or 5 decent volume-led gainers. Otherwise, it's basically just out and out kind of profit booking, which is coming through. Mitesh is with us. Mitesh, any thoughts? I mean, materially different on the downside from when we chatted at 2:30.
That's right, Prashant. I think, as I said, I think below 22,200, there's always a chance of us getting towards 21,950. We have already done that. The next level is 21,800, which was the earlier pivot low on closing basis made on the 19th of March. So most likely we're heading towards that, and maybe even lower. And I'm even looking at 21,650 as the eventual target. So 21,800 and 21,650 are the two levels which I'll watch on the downside. On the stock side, I have DLF as a STBT with a stop at about 840 for targets of 820. And Dr. Reddy is another one very negative candle here. So STBT with a stop just above 5,900 for targets of 5,820.
All right, Mitesh, thank you very much for that. I was just actually looking at the distance from the top, because remember the market pretty much turned after hitting the all-time high. The day we made that fresh high, just under 22,800. From that point onwards, I mean, it was just a slightly slippery slope. So the Nifty is off about 3.8% from the peak. The Bank Nifty, it's had so many false starts, but not really decisively able to move in the upward direction. It's down about 5% from the peak. the mid-cap and small-cap indices, that's where the slide is resuming, specifically on the small-cap index, because it's down about 7% from the peak. And this after, of course, the shakeout that happened in March because of various factors. So that's the kind of market that we're in the midst of. Right now, the mid-cap index is down almost 1,000 points. The sensex is down, 1111. So 1,111 points lower on the sensex. That's how it's playing out. I think we also have Amrish now joining in. Rohit, of course, has been with us. Taking us through some perspective on the market fall. We also have Amrish Baliga joining in. Amrish, welcome to this discussion. I think everyone's trying to second guess what's going on, and I think the loudest murmur in the market is this is election jitters. What's your sense?
I think the voter turnout is playing a spoilsport, and like rightly mentioned, there are murmurs that this fight is getting a bit tougher than what we thought earlier. Earlier we were talking of a cakewalk. It may not be that. I think that's what is playing on the market, and investors are trying to preempt the fall post-elections. So I think a few of them are trying to get out, right now itself. But then the way I see it is, if we have a decent correction now, between now and the election result date, then possibly post-elections we could see a decent bounce back in case the numbers are decently favorable for the NDA. So that's the way I see it.
No, and that's exactly what I was saying earlier, that maybe markets are smart, right? It's collective wisdom. That's so you lighten up ahead of the event, and low expectations are always good. So you get this room for surprise. You maxed out otherwise, which is not the case. Amrish, the other thing, of course, also is that people have made so much money, right? Stocks have really gone through the roof. So we are coming off those levels. So I think one has to put that into context as well. This lower voter turnout business, I don't know how to read it. IIFL had put out a note and we had highlighted this. And what they had highlighted was something very interesting. They looked at this was only for the first phase they did. I think they did something for the second phase as well. They essentially looked at the 90-odd seats which went to polling. And they essentially said that even if you assume that the lower voter turnout in these 90 seats, 90, 100 seats, whatever, compared to 2019, is a complete swing against, say, for example, the BJP. The gap between, the BJP and the number 2 player back in 2019 is so large that even if you assume that the entire swing is against them, there is enough buffer, there is enough room. So it was kind of a statistical sort of analysis more than anything else. And I think they did something similar after phase 2 as well. But yeah, all kinds of theories and debates, etc., in terms of what this may mean. Rohit, you're a big one for history and how, whether we've seen something like this at any given point in time, at a point in history before. So before elections, if you've looked at this 2019, 2014, any thoughts? Because, it's a long election, 1.5 months. You get ups and downs and ebbs and flow, finally the result. So does this mirror something else we've seen before?
So one thing which certainly changed this time was the reading on the VIX, right? The India VIX historically had always jumped up to, well over 20%. It was almost, 24, 25% in the last election. It was around 27, 28% in the 2014 election. And by the time we got closer to the results, we actually reached 35% in 2014 and around 29% in 2019. This time around, there was a sudden drop in VIX at the start of the month. And a lot of people have been trying to guess what that really meant, because if you're not really charging any premium, which means you're not expecting any surprise from the market. Now, does that mean positive surprise or negative surprise? But surely the expectations dropped right there. And that could have meant that, fine, maybe we've discounted, whatever the outcome is. Maybe a positive outcome is already discounted. You don't really expect much of a move on that particular day. So that's sort of the thought that was going through our minds. And now you have a sell-off, right, ahead of, much ahead of the event. Now, you did get a sell-off even in 2019. April of the month, there was a sell-off. And then in May, you had the election outcome. So it recovered and rallied through the result and then peaked out again after that. Now, can this be a similarity? To some extent, maybe. But if we say is every election the same, then the answer is no, because 2014, you didn't get that kind of a the sell-off, it was mostly a rally once you'd bottomed in, say, March, and then it just went up from, March onwards. So each one has been different. One thing is true that markets do tend to anticipate the outcome. So if we go back to 2004, the market was falling and it anticipated to some extent that there was going to be some degree of upset, and then it actually sold off on the outcome day. In the other two cases, the markets all the other cases, the markets rallied ahead of the results. 2009 also, it rallied from the lows ahead of the results, and the results were positive. You gapped up big time. And we've seen that in 14 and 19 as well. So as we get closer to the actual outcome, I think the markets will have anticipated and start discounting it, which means that if you actually see a rally from here, which means markets think that, yeah, this is not going to be so bad. But if the market remains weak over the next couple of weeks, then I think the market's actually scared of the outcome itself. So that I think we'll come to know as it develops from here.
Okay, gentlemen, stay on. We do have to take a break, and look at this, 360 points lower. There's absolutely no sign of recovery. By the way, as we take that break, we'll just leave you with some of the bars on the mutual fund data, and that's also telling a story. Investors, and yes, the big screaming headline is on the SIP number, but, that's hybrid. Before we get to hybrid, actually, the hybrid itself is a story. The money is really moving to a mix of equity and debt. Look at the hybrid number. 19,863. It has overshot the net equity inflow for the month gone by, April. And the net equity inflow numbers have been consistently coming down. Let's switch those bars and bring in the net equity number if we can, because from the highs of 26,000 odd crores that were coming into funds, equity funds on a month-on-month basis, numbers have come down to below 19,000 crores. So it's very, smart, perhaps, asset allocation changes, rebalancing that's going on by mutual fund investors as well. And perhaps why not? Markets have been at all-time highs. Let's take a break, come back, and we will get down to some final advice from our market experts.
Welcome back. Well, let's get to Amrish. Amrish, the markets are weak as we've been discussing, but you could have a stock on your radar. Which one is that? Some of those tire stocks are weak, but you have found a pick from there?
Yeah, exactly. I mean, although it's a bit dangerous for an analyst to give a buy call on a day like this, but I see a fall like this as an opportunity. So the pick is JK Tires. they've been pioneers of radial technology in India and #1 in truck and bus radial tires. And they have about 12 manufacturing facilities, 34 million tires manufacturing capacity, have an exclusive dealer network and distribution network about 6,000 plus, and a very good OEM presence. Globally, they are among the top 3 tire manufacturers in terms of lowest energy consumption. And if you see the last 5 years, they've been reporting superior return ratios as well as the growth compared to the peers. And Q3 also saw, extremely stable margins. If you look at the capex, ongoing capex is about 800 crores, and this one will be fully ramped up in the current quarter. So we should see Q2 numbers decently good. Another 1,400 capex is happening currently, which will be commercialized possibly in Q3 FY26. So clear visibility is there. Expecting an EPS of about 45 for FY26, and with this, my target is about 540.
Gentlemen, thank you very much for joining us today, counting down to what's been a very, very negative close for our markets. 22,000 breached. The Nifty is ending down with a cut of 350 points. The low today was 21,930, a level which Rohit had highlighted as an important support. We've managed to hold on to it, but staring at a deep gash of 1.5%. It's more than 1,000-point cut on the sensex. Mid-caps down 2%, small-cap index down 3%. The advanced decline ratio at 1:6. PSU took a big hit. So the PSU index was down close to about 2.5–3%.
Yeah, absolutely. And, the selling just continued on the mid-cap side of the market. If we talk about some of the major losers today, then, in terms of stocks that had large price movement on the way down, the final cut on Motilal Oswal is 8%. Angel One is down 6%. Remember, these are broker stocks that have rallied quite hard in the last couple of months. Sula down about 7% on disappointing earnings. Piramal Enterprises, again, a disappointment on earnings, 9% lower on that stock. That's the extent of the fall that we've seen. Some of the PSU banks that reported numbers beyond SBI, IOB's final tally is a dip of about 3.5%, and PNB is down about 2.5%. So not much respite coming in over there. And finally, I'll end with the gold financiers, because that's the big headline with which we started, with the RBI sounding a big note of caution there. On cash disposals, that is 7.5% down on Manappuram, and Muthoot down about 4% as well. So all in all, a weak session with the Nifty losing about 340 points.
All right, I think that brings us to a close here on this edition of Closing Bell at 21,967 with a 335-point cut, as Surabhi said. It's a wrap. Thank you very much for staying with us. More coming up on Markets Forward in just a bit from now. Stay with us.